Radio News Hour. I'm Joe Jaquint, CEO of the Patriot Trading Group. Our toll-free number, 800-951-0592. The website at allamericangold.com. And the physical delivery of wealth insurance, gold and silver. We've been doing this 26 years and counting, and nobody does it better than we do, and humility prevents me from saying any more than that. But, you know, gold, that old washed-up relic, the only thing that's been money, and it's been money for thousands of years. Of course, right now, we have a figment of imagination of money. The endless money printing looks like it is catching up with everybody around the world. The Federal Reserve yesterday raising interest rates another 0.75%. And Jason, Jay Powell's talking tough again yesterday. Put it this way, you know what? The very astute Jason Walker, yeah, I said astute and Jason in the same sentence. He pointed out as Jay Powell was testifying, because, you know, everything's made for TV now, so they got to have a press conference to explain to people, because we're too stupid to understand it for ourselves, why they're doing what they're doing. But the big thing that disappeared was, well, we're going to have to wait for the data. Right, we're going to have to see what the data says. Apparently, Jay Powell and his buddies, Jason, have seen enough, and they know inflation isn't going anywhere.
Yeah, you were, because you listened to the comments. I didn't sit and listen to his comments, so you were giving me a play-by-play. And based off what you were telling me, what I was hearing was he always says, well, we'll do this if the information says it, or we might do that. What he said was, we're not lowering rates until, and he wasn't talking about any data. It was almost, you know, what he didn't say is, we have the data. We know what's going to happen. He's making decisions based off information they have. He just doesn't want to say it out loud because he knows a lot of weak-kneed people in the markets they'd probably shatter with the bad news.
Yeah, and again, we've had an interesting Federal Reserve week this week. You know, normally the normal rule of thumb when it comes to the Fed is they come out, they're doing the rate hikes, the dollar rallies, the stock market claps, right? Oh, yeah, Jay Powell. And easy money, all that stuff. Gold and silver fall. The exact opposite happened. Gold and silver they're not up huge, but they're up. The Dow was down another 525 points yesterday, down again today. Right now, it's trying to stay above 30,000. Early this morning, it hit the lows of the year. I don't know, anything can happen, but I feel like we're getting ready for that next leg down on Wall Street, because the realities are, even at 3 to 3.25%, Jay Powell yesterday, things are going to still go higher. And then this morning we got jobless claims. So here's the issue they have. The biggest issue is, yeah, we're the economy's slowing down, but people aren't getting laid off in mass, and, you know, the unemployment rate is still low. Wages are still red hot. First-time jobless claims. So remember, we had that spike kind of early in the summer, right? Started in June and into July, right? The layoffs were rising, and we were following it. And then all of a sudden, they went right back down again. Only 213,000 people filing for jobless claims. Continuing claims, which has been rising, ebbed a little bit. Not a lot, but a little bit. But Jason, again, I don't think we're going to start seeing that layoff pendulum swing. I still think we're a month or two away, which just means that we're going to get even more rate hikes. I actually think we're going to be over 4% on a Fed funds rate before the end of this year.
I agree with that, and it's interesting because not too long ago they there were so many jobs out there. People weren't, businesses weren't getting the jobs filled. So obviously that's changed quite a bit. But now with the inflation, Joe, and there's no stimulus being handed out currently, I think a lot of people are filling as many job openings as they can. People are getting more jobs right now. They have to make ends meet. So it's funny, as long as there's jobs to be had, and there are still jobs out there, they may not get that lower jobs that they need to change that situation they want, Joe. So it's especially with the holiday season coming.
It's going to be interesting. Target announced their hiring, holiday hiring. Remember, Walmart shocked everybody yesterday by how few. Walmart or Target said, hey, we're going to hire less, but not that much less. 100,000 is Target's number. They were 130,000, so it's not as bad as Walmart. But why do I just have this feeling that Target's going to be hiring a lot of people that are going to be working like one shift a week.
Yeah. I'm not in that job market, Joe, and I've of course I've seen teenagers, my son's friends and jobs. I see that stuff going on, but it's different. Yeah, it used to be 5 days a week, right, or part time, and now, yeah, you're right. There's it's such a different job market that everyone just wants to hire you for part time because no one wants the responsibility of a full time employee. It's we haven't really talked about it a lot lately, but I think it's just gone from bad to worse when it comes to part time job guys out there.
Yeah, more people than ever working multiple jobs. When we get back, did our luck finally run out? There's a hurricane developing, and it's got its eyes set on the Gulf. We'll talk about that next. 800-951-0592, Patriot Radio News Hour. Joe and Jason here on this Thursday. And before we get into the hurricanes, it's a tough spot. This is exactly what we are envisioning. Think about how long Jason and I have been talking about what we are naming it that double Great Depression, right? When the Federal Reserve and Janet Yellen and Jay Powell and Jim Cramer, all these yahoos on the stock channels were talking about soft landings. We were like, dude, that's not what the data says. As much as, it's the old, it's kind of like Fauci and COVID. Follow the science, but they weren't following the science. Well, it's the same thing here. They weren't following the data. And today's jobless claims number, again, I'm still saying 50 basis points in 6 weeks. But, Jason, right now, I'm worried it's going to be to the upside. We could very well see another 75. We could see a dollar. We could see a whole point in 6 weeks if inflation stays where it's at, or if it goes higher. Right? I think they'll be forced again.
Yeah, Joe, we were talking yesterday, and the year over year in 2021, in the months that we're in now, let's just say the June, July, August, September. They were in the fives year over year from 2020 to 2021. But when you get to the October number, I think it's 6.2. And then it gets higher, 7s and 8s, as where we're at now. So if the numbers stay the same or go up, when the year over year was going up, the last few months of this year, Joe, if we have 8, 9, if we're in that range at all in the next few months, and especially this next one, if it's 8.5 or higher, the CPI, I believe they go to a point. I mean, that's how bad that's going to get, because the Fed's going to freak out if it's let's just say it's 8.7. The Fed's going to freak out knowing that the next number is going to be year over year over a 6.2 from October of last year. They're going to really be freaking out, Joe. They're going to have to push it hard.
I don't recall ever hearing a Fed chief utter what Jay Powell uttered yesterday, talking about, we need people to lose their jobs.
Yep.
Flat out said it. We need the unemployment rate to go up. We need the job market to cool down. One reporter, they were talking about the unemployment rate, something like in the low 4s is where they were talking. They wanted it. And one reporter's like, so you're telling me you want 1.3 million people to lose their jobs? And essentially, Jason, I don't think I've ever heard that from a central banker before that we need people to be fired.
Yeah, it means it's broken. That's how you translate that. It's broken. And here's the thing. Like I just said, there's no right now that if they really wanted to help the people out, this is the time the Democrats should be putting stimulus out. Instead, they're going to have a competitive job market where they won't have to raise the wages anymore, Joe, because people are going to work a lower wage just to make ends meet. That's where we're headed for. That's why I don't think the job numbers will go down. I think people are going to have to make money any way they can, Joe. So we're reversing everything from a year ago.
And we've been really lucky with energy. And our luck may have just run out. We'll know in the next 24 hours or so, but apparently they've got one of these tropical depressions. They think it's going to become the next named storm, Hermine, and this one is located in the southern Caribbean Sea. They're saying all the conditions, this is prime, hurricane season. They believe it's going to not only intensify very quickly, but to become a major hurricane next week. And they say that the computer models are saying landfall somewhere in the Eastern Gulf, in between the Eastern Gulf and the Florida Straits. And, of course, if it's in that Eastern Gulf area, Jason, that's Refinery Alley.
Yeah, there you go. And that'll make, when Germany's decommissioning their nuclear power plants, and of course America's, they're not going to drill anymore, and they're going to cut production, and they're waiting for something like this to happen. It's almost like they're like, well, we can only do so much. We don't want to get blamed for completely manipulating, which is what they're doing. This goes almost to Dane Wigington territory. Let's manufacture an emergency so we don't have to be blamed for the energy problems that are going to happen. Because it seems like, Joe, that everything they're doing is they want this to happen. They want energy to go into astrologically high pricing for whatever changes we're getting ready to head into.
Yeah, and again, like I said, it was just a freak year.
Yep.
We had that one hurricane that hit, Puerto Rico, and then took a right turn, right? And it's going to go up near Canada. But outside of that, there really hasn't been much of a whimper at all. And then, of course, right as, of course it makes sense. Hey, right as everybody's realizing, oh, wait, they're just pumping millions of barrels out of that reserve to cover it up. So we really didn't know. And like I said all along, the election's, what's the election, November 8th?
Pretty soon.
So conveniently, right, hey, we're going to stop pumping out of the strategic oil reserve at the end of October. So that way gas prices look better until the election. Right after that, it's going to get worse. And now all of a sudden, here comes the first hurricane. It's not there yet. Let's hope it doesn't happen. Listen. Let's hope it doesn't happen, but the computer models actually got worse because I first saw it yesterday, and it looked like it was going to happen, but it looked like mostly it was going to just hit Florida. Today, it looks like it definitely is going to happen, and now they're saying, it looks like it's maybe going to go more left, which means New Orleans.
Oh, boy. Yeah, and the Mississippi River, that's the kind of the whole entire economy of America. So anytime it hits in that area, it's tremendously troubling for everybody. So not just oil, Joe. So that's why when Katrina hit, it was such a bad thing because it just disrupted everything. So we'll see. We'll see. We've had several years with really not any hurricane problems. Really, it's not just been this year.
Yeah. And again, I hope it doesn't happen, but it's right now. I don't like how it's looking right now. We'll know more, I think, probably tomorrow. By this weekend, we'll know for sure. This is something that if it happens, it's going to happen next week. So we'll keep our eye on that. Last night while you guys were sleeping, I was awake, you guys were sleeping, the Japanese yen started collapsing. So we've been watching the Japanese yen. It's been trying to. Last week, the Japanese central bank kind of drew its line in the sand and said, we're not going to let the yen weaken any more than 145 yen to the dollar. Last night, it broke through that. It was on its way 146, 147. I mean, this thing was on a rocket ship to 150. The Japanese central bank had no choice. Early this morning, the Japanese central bank stepped in to protect the Japanese yen. And Jason, they had to go on a massive yen buying streak. It's got the yen at least back under that 145. It's about 142, 143. But something very obviously just tells you how broken these things are. Remember, China yesterday attacking the United States and their quote-unquote strong dollar. That's not strong at all, but putting everybody in this bad place. But to give perspective, how this is a perilous position the whole world's in, because we're tied together whether we like it or not. We know the problems in Europe. The Japanese 10-year government bond. So we know here, right, when we talk about bonds in the United States, unless you specifically specify a year. If you're just saying, hey, the bond, when people quote the bond yield, it's the 10-year note that they quote. By the way, up big again today. Here, U.S. 10-year note 3.7, U.S. 2-year note approaching 4.2%. Everything's getting more expensive. But the Japanese 10-year note, there has not been a single trade, not one, in the last 48 hours. The last time something like this happened was in the 90s there in Japan. Not one single buyer has bought a 10-year note in Japan in 48 hours, Jason.
The Central Bank of Japan yesterday performed a quote-unquote foreign exchange check, signaling their intent to dump their vast holdings of U.S. Treasuries. And then up here,
well, so let me tell you what they have to do. So to give perspective on that, we're going to buy our own currency and we're going to sell U.S. dollars. Yep. Right? We're going to try to strengthen our currency and we're going to try to weaken the dollar. And notice what's happening to bond rates, continuing to explode higher as Japan has been signaling, hey, listen, we're the largest holders of treasuries, and we don't want to be anymore.
Right, and then like you said, they strengthened the yen a little bit to try to keep it up, and then immediately the Turkish lira starts falling drastically. Right here, the Deutsche Bank, this guy Tim Baker says the Japanese yen will unlikely strengthen from here on out. So he's like basically saying this is the best they can do.
Yeah, I don't know. They have no options. They really don't. I mean, I said it a few weeks ago. The Japanese yen should probably be at 200 or 300. Probably should be. Because look at what I just said. Could you imagine what would happen here if the federal government, if the central bank, the major bank said, hey, nobody came to the 10-year auction today. Yep. Nobody showed up to buy our debt. And of course, the Japanese central bank is the one buying all the debt there. And our central bank, this is another storm I don't think they anticipated when they started this quantitative tightening. Wait a minute, we're trying to dump bonds, but wait, the Japanese are dumping them, the Chinese are dumping them, the Europe, everybody's dumping them.
10 days ago, listen to this, Japan, you have a weak currency, and I think most people envision, well, then now that country's really in trouble. It doesn't exactly work that way. Here's 10 days ago. Japan warns against abrupt yen moves. Another senior Japanese official has spoken out about the weak yen, promising measures to ease the impact of movement in the yen. What that just means dumping treasuries, doesn't it, Joe? It's everything I'm reading is all about, hey, they've already dumped $1 billion or $100 billion, right, recently, Joe? There's going to be more. There's going to be more of that.
The pace is going to continue. They have no choice because think about this: their currency's really essentially lost 50% of its value this year. Japan is very dependent upon imports, right? We know this. They're surrounded by water. They need all of their energy, all of their oil, their gas, all of those things. They got to. So they're a country that buys in dollars. So they've got to take their yen and buy dollars to buy crude oil, as an example. Well, earlier this year, at the beginning of this year, it took 100 yen to get $1. Well, last night, it got to 146, 147, right? And so Japan stepped in to get it down to 142. But think about this. You need 40% more yen to get to that $1, so you can see the effects that it will have. And this is what China was complaining about yesterday. Japan is complaining about it today. And here's the problem, Jason. I don't think it's going to work.
Right, which is why I read this. 10 days ago, Japan warns against abrupt yen moves. They're warning, right? They're saying, Joe, you better not crap on the yen, right?
And it happened last night. It happened last night, and it's going to happen again. Patriot Radio News Hour. We'll be back after the break. 800-951-0592, Patriot Radio News Hour. Joe and Jason. Silver has been disappearing very quickly. I'm going to just warn everybody from here, probably through the rest of the year, be patient when you have silver in your order. Right now, yesterday, the girls bought the last of the junk bags that were readily available. They're still out there, but we're 2 to 3 weeks out. We have some silver rounds available. They're 2 to 3 weeks out right now, but we have them available at $540 a roll. It's the only way to buy silver below like $32 an ounce. So we're at 27 here on silver rounds at 800-951-0592. That's almost $10 an ounce less than a silver eagle, Jason. It's more than $5 an ounce less than what you can get junk silver for. But all silver right now, just plan on waiting.
That's the situation as it stands. There's nothing it's not like silver grows on trees, right, Joe? We can't just harvest some and give it to you. We have a market we have to deal with, and 3 weeks, Joe. It just seems crazy. She'll be able to just order the stuff and get it in, right? But
and I'm going to say 3. Usually we'll go faster than that, but again, this is silver. Anything is possible. Silver has really performed very, very well. Normally, after a Fed rate hike, you're going to get 2 or 3 weeks where everybody stops worrying about it because the next Fed meeting's 6 weeks away. If we're going to get some dollar softness, that's where it's going to be. I actually expect to see silver back in the 20s and really marching higher from here. And again, the inventory levels, it's just flying out of vaults everywhere. That's not that long to wait, couple of weeks here. Silver rounds, $540 today at 800-951-0592. Silver right now, $19.60. Has been as high as $19.90 today. So silver showing a lot of strength here. We talked about rates. We've talked about Jay Powell. We talked about how the fact of the matter is he wants people to get fired. We briefly talked about how much this interest is going to cost the government. We've got some numbers in. Now, I want you to think about this. Fiscal year 2022 ends next week. So the 31st of September, that's the last day of fiscal year 2022 for the federal government, which just means we went 6 months, October, November, December, January, February, March, where we still had rates at 0. And then the Fed started, remember the quarter of a point at the end of March, April 1st, quarter of a point. Already, interest on the debt between 2021 and 2022 is up 30%. And that didn't even count the rate hike from yesterday. Right? So, and again, Jay Powell saying, hey, we're not done. We're going to be well over $500 billion in interest on the debt this year. People are saying next year's number, Jason, will approach $1 trillion just on interest payments.
Yeah, that was going to happen no matter what kind of economics we have going on in this country. That the interest on payments are going to go up. So with the inflation, it's just going to create an even worse situation. And to have the rates going up obviously makes the interest paid on the debt spiral up. But Joe, this is one of those games they play on us. You question a lot. Why are they just raising it 0.75 of a point and 0.5 point, and they're just kind of tailing behind it? Because one of the games they play, Joe, and I'm trying to get myself out of that game is the year-over-year numbers. How is it compared to last year? How is it? Right. So if you just damage it a little bit in 2022, then you can damage it a little bit. If you have the ability to kick that can down the road, damage it a little bit more in 2023. And then you just say, well, compared to 2022, it wasn't as bad. It's still worse, but it's, but what you got to look at is where was it 2 years ago before all this stuff happened? Where was it before coronavirus?
Right.
Yes.
Right.
You got to look at it before.
Jason was doing that earlier today with the inflation numbers. Hey, remember what was it, October or November?
It's October
of last year
6.
when they retired transitory, remember?
Yes. Oh, yes.
Right? So think about it now. So we're 8-9%. Well, last year, right, these numbers started really ticking up at the tail end. We're going to be at, the 5, 6, 7%. All of a sudden, you add them together, you're almost at 20%.
Correct. And that's what they don't want you to look at because they just give you these annual numbers. Well, things are happening more than just last year. And I mean, coronavirus and then 2019, that's where this thing really heated up, Joe. This is where their fake recovery of 2008 started to show its real colors, was 2019. And now we're here, right? Right. And now it's like a controlled burn, isn't it? That's what it feels like they're trying to do. Their soft landing, it feels more like a controlled burn. And I don't think they're going to control it for very long, Joe.
Well, I'm going to say this. Doesn't it make sense now? Remember the story we broke about Janet Yellen yesterday? She's been traveling everywhere, having these little private meetings that we're, not that privy to, saying that we need to raise taxes. Well, I think I just found out why. Just interest rates alone are going to add, in over a 2-year period from 2021 to 2023, almost $1 trillion more in interest payments alone. And so where's that we got to make some of that money somewhere, Jason.
Yeah. They have these books. Never mind the fact that the Fed can print and make all those criminals in Washington on Wall Street. They can cover their ends by just printing and giving it out. But for us, the taxpayers, the slaves to the system, well, if we can't make this balance at least partially, because we're always having a higher debt every year that the debt gets higher. But they just can't have it go up $3-4 trillion in 1 year, Joe. They don't want that, at least not today. So they said, well, how do we? It's all money in, money out, and there's just not enough money coming in for the money that's going out. So you are going to have to do it. You listening to the show, you're going to be the one to do it.
Yep, we got one line open right now. U.S. Silver Rounds here, 540 a roll at 800-951-0592. I'm chasing some gold here. I'm waiting on an email. I'm hoping to get one soon. So stick with us. We're going to be right back. 800-951-0592. 2 lines open. Silver Rounds at 540. Brittany we got the email. Brittany just brought it in here. We've got 75 more $5 liberties. Jason, we're going to do these at $540. Take advantage. Fractional gold has been absolutely on fire. This is a great price on $5 Liberties. I mean, think about it. What, about 6-8 weeks ago? These were $600. So this is a huge savings here. $540 on $5 Liberties, and $540 on silver rounds. So there you go. It's the 540 special, 800-951-0592. And I just want to throw this out there. How bad is it going to be? Right? So we went from no inflation to transitory inflation to, okay, soft landing, to we're not stopping until inflation's back below 2% and we need people to get laid off. That's what he said yesterday. I mean, we've never seen it before, right, Jason? But let's put this in perspective. Because we know, go back to the 87 crash, that was bad. Right? The tech bubble, that crash was worse. The financial crisis, right? That was worse. Here's what we know. Every one of those crashes was followed by more money printing. We dwarfed, you could take the money printing from all three of those crashes, combine them, and you're only at about 25% of the amount of money they've been printing behind our back for the last 15 years. So we've never had a boom like this. We've never had interest rates this low for this long ever. Remember, interest rates had never been zero before. And to be essentially zero outside of an 18-month period for 15 years, never before. We've never had an economy more screwed up right now, right? I mean, think about it. We don't know what to do. All the CEOs are saying things are slowing down, but yet job market's still red hot. Inflation's raging out of control. We've never had bigger asset bubbles. Think about it. How many times have we said with Wall Street that every single metric, going back to the Great Depression, never had we had a bigger asset bubble. Never have we ever had bigger debt bubbles. Look at what happened last night. They're trying to act like it was no big deal. Japan had to jump in to save its currency and start selling dollars. And oh, by the way, they haven't had a 10-year note sell in 2 days. It'll be fine.
And Joe, we never. Here's the thing: it's basic economics. What you're talking about, never been here. You know, rates been low for so long. Well, it has to be. The rates have to be low for this long because the national debt's never been this high. You just talked
Remember
about
Janet Yellen, go big. What does she think now?
Yeah.
What do you think now, Janet? Idiot.
And you know what?
How about the
Federal Reserve note, Joe,
the
Federal Reserve note is so bad. The value of it has been destroyed so bad that we have a special for $540 on $5 Liberties, and not 20 years ago you could have bought a $20 Liberty for that much, a full ounce of gold. You can only get a quarter of an ounce of gold on that, and it has nothing to do with the gold, Joe. It's just the Federal Reserve notes.
I've been here 20 years. The first $20 gold piece I sold, I want to say it was $350 or $335. Right now a 20, right? Now a 5's $540.
On sale.
On sale. That's right. On sale. Thank you, Jason. On sale. How about the misallocation of capital? Right? Where the wind and solar when we need oil and natural gas. So what do you think really is going to happen? Right, we're going to have a little. Don't worry. It's just going to be a baby recession. Really? That's what you think? Right? Oh, somehow we're going to have a soft landing. We just had our Fed governor come out on national TV and say, hey, I need people to get fired. That's how bad inflation is. I need people to get fired. I will raise rates as high as I need to until you're fired. What do you think that's going to do? What do you think miraculously they got a little counter? Well, there's one person fired. Oh, there's 3, there's 10, there's 100, there's 1,000, 150,000. You think they got like a little clicker and they're counting how many people go, we got to 1.3 million. Okay, we can just stop now and everything's going to be fine? God, I wish it worked that way. Don't you, Jason?
Yeah. Well.
Oh, hey, we just fired 1.3 million people. Okay. Time out now.
Never mind what that'll do.
It's just incredible, the idiocracy that they sit there. You know what's so funny? They say it with a straight face. They want you to believe, okay, don't panic. Dad, I hope you guys are taking care of your other investments. I know, obviously, get that gold and silver put away. But if you're not taking care of your other investments, you're in for a rude awakening. If you've already taken a big hit, get ready for another one. If you don't want to take it, call my son. I keep telling you, 602-909-9048. Give Joey a call. At least try to hedge yourself here, Jason. This thing's going to get ugly.
Exactly, Joe, exactly. And the only thing I don't think it's easy to predict is the velocity, how fast it's going to happen. Is it going to be slow and grinding, or is it going to happen all at once at some point and really go down? Or maybe a little both, right, Joe?
We always have a handful of huge days that do the majority of the damage, to Jason's point. Gradual, bam! Gradual, bam! Patriot Radio News Hour. We'll be back after the break. 800-951-0592. Got gold up $4 here, $16.72. Silver's up about 10 cents here, $19.56. The Dow down about 100 points. It's 60 points, 70 points away from breaking below 30,000. The S&P's down 25. The Nasdaq's down 140 points. They're about 80 points, Jason, from breaking below 11,000. Crude oil is up. And again, like I said, we'll know in the next day or two. It looks like we're going to get our first hurricane that's going to go into the Gulf. Right now, if you took the computer models and put it right in the middle, looks like a direct hit to New Orleans. Let's hope that's not the case. It's still too early to tell, but I just want to throw that out there. We've been really lucky in that regard. But Jason was talking about Wall Street. Is it going to be gradual? Is it going to be this or that? Just remember, was it 2 weeks ago? One day, lost 5%.
Yep.
Right? Lost 5%. Everyone kind of gave up on the lows for the year are in. They gave up on that nonsense. And I think when we break below here, we're going to have another day like that. All of a sudden, the Dow's going to be down 1,000 or 1,500 points. Think about earlier this year. We went about a 90-day period where the Dow went from 37,000 to 30,000. But in that 90 days, it was 3 or 4 days where all the damage got done. And that's that's how Wall Street seems to operate. They'll come here, they'll break down, we'll get to new lows. There's going to be a few days, just a handful of days. It may be 2 or 3 or 4 days where all the big damage gets done, and then the rest of it, like Jason said, it goes up a little bit, down a little bit. But it's those days that make it hard, because you get fooled into, it's okay now, the worst of it's over, and then all of a sudden, there's one of those days, Jason.
Correct. And so remember a day like today where things seem to be a little more honest. The markets seem a little more honest as to where they're headed. Because, Joe, I got the sinking suspicion. And if it sounds like we're rooting against the markets, in a lot of ways I am. You're not supposed to say that. I am, because it's rigged. And why do I get the feeling by the time we get back to November that it's very possible, Joe, that they're going to gain all this back. It'll just miraculously come back. Because we know that the politicians, the controllers, they love the socialist style of government that the Democrats give us. So why do I get the feeling that we get close to November, suddenly all the markets will come back so that the voters, the mail-in voters before, so it might happen in October, and then the voting day in November. I don't have a feeling they got to make it look good, rig it at least for a couple of weeks. Do they have that strength? Do they have the economic pull to do that? I'm guessing they do. But remember where we're at now. Remember where we're at now.
We don't have the next Fed meeting for 6 more weeks.
Yes.
So that gets us right there after the election. So the next couple of weeks, normally if you follow these patterns, I wouldn't be shocked to see about 3 weeks where they're like, okay, well, let's not focus in on what they're going to do, with the next rate hike. So it'll be close. I still think we're not getting out of October unscathed.
Let's see what happens, Joe. I mean,
but to Jason's point, it could be November.
Well, the world could be looking really horrible in October. But if the markets look okay, then a certain section of America is like, well, it ain't that bad. The markets are holding up. That might be the thing. The world looks bad. The markets are okay, Joe. That's kind of what I think they're aiming for if they rig it.
Patriot Radio News Hour. God bless everybody.